That's going to be it for today. I'm pleased with today's performance. Here was the first trade we had where I noticed this appendix here setting up for a pattern failure based off of this momentum reversal here. The entry point would have been 63.25 if we had traded there. It moved away from there up to this little chop to knot zone, pivoted sharply off there. So if you were to enter, you would need to enter lower than 63.25. It came lower, didn't break this low, and then popped up and made a little ledge right at the trigger point, and that's how I made my decision to go long at 64.50 with the stop under this trigger point. 70-ish was the ultimate target, but I was watching for this high here, and if it didn't just push through, I would take my smaller gain. I did get a tick less than I intended to get. I got 67.25 instead of 67.50. My finger slipped on the mouse and I put the order a little bit lower, and then the market traded lower as I tried to move it to stop a bit higher. So that was that trade, and then that was 11 o'clock this morning. Then the next one was down here, and this was just before 2 o'clock this afternoon. Came back to the charts, noticed this appendix at lows, the momentum reversal. Once we had the appendix here, we needed something to turn it around down here. We got that. I got in at 18, and then it proceeded to pop higher. It went 2.75 in favor up to this appendix zone, and then sold straight off of there, and I was sure it was going to hit the stop. But then when it came back up and put in wicks near this high, I adjusted the target and took 2 points, which is actually less than an R, but we're looking for risk to reward that's greater than 1-to-1 over the long term, so it's not absolutely crucial that every single trade is over that R, and it told me to get out, so I did. Of course, in retrospect, you can see trade back down, wouldn't have got the 15, what would it be, the 15.75 stop, and then would have traded up to the golden mean as some usually do. But the way I think of it is, at this point we're at 20, down to our 15.75 stop is 4.25 points, but up to the eventual and final target is only around 3.25 points. So you'd have to be right far more than 50% of the time to make that worth your while, and it's just not worth the trade-off in terms of the equity curve and keeping it smooth and so forth. So I'd rather have a smaller reward to risk ratio. So I have a reward that's closer to being the same size as the risk, with a higher win rate rather than a lower win rate with a reward that's substantially more than your risk. So that's the way I've chosen to do it. Can't say I made any mistakes today, so I'm going to end it there and back it tomorrow.